Alrighty, welcome back to the video. How's everybody doing? Hope you are doing well. Andrew Kuhn, Focus Compounding. Thank you so much for tuning in. If this is the first time you're watching me, go to your podcast app, go to Podbean, listen to our podcast. My partner and myself, we have about 109 different episodes on everything investing related. We go pretty deep in a lot of different topics, so definitely check us out there. Hit the subscribe button so you can get a notification for all future videos that I do upload, and then follow me on Twitter at Focus Compound, where I tweet out a bunch of investing content as well. So in past videos, we've gone through durability, moat, quality, and the next one on our list is capital allocation. I really want to stress again the order that we purposely laid out of this checklist when we're analyzing companies. If you can't figure out the durability, the moat, or the quality of the business, you certainly should not care about capital allocation. Again, put in the too hard pile, go on to the next business. But assuming that you can figure all those things out and you're to the point where you are thinking about capital allocation, the first thing you probably want to think about is what's the history of the business, right? What's the history of the dividends? Have they always paid a dividend? Have they ever paid a dividend and then stopped paying a dividend? Were they able to pay a dividend in some sort of economic stress, either within the company or from a macro perspective, right? This is all good information to know. Did they ever buy back stock? How do they buy back stock? Do they buy back stock when it's expensive? Do they buy back stock when it's cheap? Do they use debt to buy back that stock? How are they actually using it? Are they using free cash flow? Do they ever issue stock? Right? Obviously, that's probably, Geoff and I probably wouldn't like a company that's issuing stock, but have they ever done it? What's the CAGR in the number of shares outstanding? Has that been decreasing over time? Have they been consistently buying back stock? How much does management own of the company? All right, and of the stock. You get all this information from the proxy statement, which is a very good filing to learn how management's compensated, how their bonus structure is. We obviously read that for every single company. But how much do they own of the company? How much of their bread is buttered to the success that shareholders are going to participate in? This is all good information to know. Is there, and speaking of that, the stock that they own, is that significant in relation to their salary, right? I think it was Steve Jobs who took $1 a year. Copart CEO, I think he also takes $1 a year. He's eating his own cooking. Every single dollar in his net worth is pretty much tied to the value of the stock, which is also tied to the way that shareholders make money. So this is all good stuff to know, because there's a lot of incentives there, right? What did they say they would do in the past? Did they follow through on that? Read the transcripts. If you really want to learn about a business, read the transcripts, and then listen and read the Q&A sections where analysts actually ask some questions, right? Have they made promises in the past, and were they able to fulfill those promises? Do they use the typical jargon? It's always interesting to me when I'm listening to a CEO who I could tell probably doesn't come from a finance background or an investing background, and they're using the typical jargon that investors like to hear, right? Learn to read between the lines. Are they talking about growth in the market cap? Are they talking about growth in intrinsic value? Or are they talking about profitability of the company? One of my good friends, Vetla Forschlad, I actually shouted him out on Twitter. He was doing research on a company called Norbit, and he was speaking to the CEO. It's a very small company that's growing pretty quickly in Norway, and the CEO kept stressing that they are focused on profitable growth. Yes, they want growth, but they want profitable growth, right? That's the type of CEO that you want running your business. Free cash flow. What have they done with it in the past? Right? Have they used it to pay it all out to shareholders? Have they bought back their stock? This is all good information you want to know. Does the company ever acquire things? What do they pay in the past? Do they pay a reasonable price? Is that their business model, is to acquire things? You think about Valiant Pharmaceuticals. Their business model was to buy drugs and pretty much raise the prices. Is that the type of business that you want to be in? Right? They raised a bunch of debt, and then they would do that, and then eventually everyone knows what happened. There's a bunch of other companies that use that as their growth strategy. This is all good stuff that you want to know. But really, one thing that is very important that we definitely think about is when it comes to the bonus, kind of going back to that of the management, because again, we want to know how management is incentivized, is how much of the bonus comes from growth in return on equity, or return on capital, or market cap, what measures is the company using? This is all good information you want to know. So this is just a quick video going over capital allocation. I want to thank you so much for tuning in with me here today. Again, if you have no idea who I am, definitely check out all of our stuff. If you want to get access to free information like stock write-ups, go to focuscompoundinggazette.com. There's a ton of different information, a ton of different content, and it's a lot of fun. So thank you so much for tuning in, and we will see you in the next video.